All right, hi everyone. It is my distinct pleasure to introduce the Satoshi Papers. My friend Erlina just told you a little bit about it. It is the first book published by the Texas Bitcoin Foundation. And all three of us on the stage today are contributors to the volume. So the Satoshi Papers is a collection of essays by social scientists from the United States and around the world about Bitcoin and political economy. And this is an important topic because when we talk about policy, policy is always downstream from political economy. So we're talking about ideas. We're talking about philosophy, political philosophy, economic philosophy. We have economists, anthropologists, philosophers, historians, and others who have contributed to this volume. So it is now available for pre-order through Bitcoin Magazine. So I would highly encourage you, if you're interested in some of these larger political questions, to take a look at that. And today I wanted to introduce you to my colleagues, Josh Hendrickson, economist, coming all the way from Mississippi, and Avik Roy, founder and executive director of FREOP, based here in Austin, Texas. We're going to be talking a little bit about US global leadership. So it's no secret that the power of the dollar has in some ways mirrored and underpinned the power of the United States in the world. We have, over the past few decades, been moving toward a more multipolar world in which other countries, Russia, China, the Gulf states, Brazil, the European Union, they are consolidating into powers of their own that in some ways are rivaling the power of the United States. And so I wanted to talk a little bit about the relationship between that geopolitical power and money. And so what I'd like to do is I'd like to start with Josh. Josh's contribution to the Satoshi Papers provided a historical outline of how the world got to a central bank and fiat currency paradigm for funding government expenditures. And so I wanted to invite Josh to present his argument to us, and then I'll invite Avik to present the argument of his paper, and we'll talk a little bit about the ideas.
First of all, thank you for having me. So my paper is really about the international monetary system, and it's kind of a story of how did we get here, how does it work, and what are the challenges that we face. And so in terms of how does it work, you know, the US dollar is the global reserve currency. The US Treasury security is the global reserve asset. And this state of affairs kind of provides the United States government with a lot of advantages. So the government doesn't really have to worry about, balance of payments problems. They have very, very large passive buyers of its debt, and so they have relaxed fiscal constraints. And of course, the dollar-based system gives them the ability to impose dollar-based sanctions on their adversaries. And so this system for the United States government is a very powerful tool, and a tool that they want to hang on to. In thinking about how we got there, a lot of what my paper covers is sort of the evolution of the state's monopoly on currency over time. And the fundamental lesson there is that, the state's involvement in money has always been kind of the same thing. It's always motivated by this desire to be able to conduct emergency financing, right? And what I mean by that is the ability to generate lots and lots of revenue in very, very short periods of time. And so the nature of that system creates some challenges for the modern world. And part of the challenges that we face now is that with the US Treasury security being the global reserve asset, what this means is that as the rest of the world grows, their demand for reserves grow along with it. But their demand for reserves requires the United States government to produce more and more debt. Okay, and so the challenges that we face with this system, there are political challenges, and then there are economic challenges. So on the political side, this state of affairs suggests that the United States government is going to be very, very reticent to let go of this power, and that they're going to do whatever it takes to kind of maintain that ability. From an economic perspective, the problem is that this system sort of generates ever-increasing amount of debt from the United States government. And so like that ever-growing debt creates a problem. And it creates a problem because at some point that debt becomes unsustainable. And once it becomes unsustainable, you know, the system can unwind, right? And it can unwind through, you know, very, very high rates of inflation from people not willing to lend money to the United States anymore. And so when you think about those things, it sort of sets the stage for thinking about all sorts of political and economic challenges in sort of the days ahead here.
Thank you. And so Josh has kind of outlined for us how we got to where we are today. And what Avik has done in his paper for the Satoshi Papers is he's helped us chart a potential course for the future. So Avik has outlined 3 fiscal scenarios that the United States could potentially follow in the coming years. Could you tell us a little bit about those?
Sure. So my paper is called "Then They Fight You." You know, based on that adage that I think most of us know. First they ignore you, then they laugh at you, then they fight you, then you win. And you may think they're fighting you now, or at least have been over the last several years, but that's nothing compared to if the scenario that Josh described actually emerges, say 15 years from now, where our debt to GDP ratio is 300%, and that we literally run out of other people's money. The U.S. is not able to issue or is not able to borrow what it needs to borrow to finance the government because the interest costs are too high. What happens then? What happens if Bitcoin and perhaps other digital assets rise in value and there's a real flight from the US dollar to Bitcoin? How will the government react to that? And there are 3 scenarios I outline in the paper, which are, one is the restrictive scenario, one is the palsied scenario, and one is the munificent scenario. And I use these kind of fancy words so that you can kind of like maybe think of them as different from kind of conventional good, bad, and neutral, because they're not really good, bad, and neutral. The really restrictive scenario is, let's just basically say, the standard Latin American model or China model, where we enact capital controls. You know, we're not basically don't allow Coinbase and Kraken to exist. You're not able to exchange US dollars for Bitcoin. We basically force everyone to convert their Bitcoins into ETFs maybe. You know, we do something like FDR did in the 30s, where he says you have to hand over your Bitcoin and give it to us. And of course, not everyone will comply, but maybe some will. Certainly corporations might have to. A MicroStrategy would be legally required to, unless they flood the country. So you could imagine a government doing something like that, which of course wouldn't solve the problem. You'd still have a federal debt that would still be very large, that you wouldn't be able to finance simply by preventing people from escaping the dollar. But that would obviously be bad for holders of Bitcoin. It would be bad for people who wanted an escape hatch from the high inflation. The second scenario is sort of a palsied scenario, which is basically like, think of the polarized paralysis we have now, where we can't actually solve big problems like entitlement reform because Democrats and Republicans fight against each other and they're not able to solve big problems. The good side of that is they can't actually do anything really negative either. So they don't do the confiscation of your assets or some of the really aggressive stuff, but neither do they actually solve the problem, which also ends up being a negative scenario. It's just less negative than the first scenario. And then the munificent scenario is, imagine that in 2044, a Javier Milei type character becomes president of the United States, really is able to rally the public around some sort of fiscal consolidation that gets us out of this mess in some way that actually perhaps the US dollar ends up being partially or fully backed by Bitcoin after a partial default of Treasury securities, something like that. So it'd still be bad, because, you know, we'd still have an economic collapse from the partial default of treasuries, but in exchange for that, we'd say, we're going to really solve the problem. We're going to fix Medicare and Social Security so that we're never going to go bankrupt in the future, and then bond investors could feel comfortable that the U.S. was going to be solvent in the future. So those are the 3 scenarios I outline in the paper. And then the takeaway for us is, okay, so if we think these are the reasonable, likely outcomes, and you can say, okay, maybe the negative outcomes are more likely than the positive outcomes, but this is the range of possibilities realistically when we have a fiscal collapse, what should we, as people in this industry, in the digital assets industry and world, think about how to plan for that outcome? How should we make ourselves resilient to that outcome? And what I argue in the paper is that there are several things we have to do. First is we have to massively expand the constituency of people who benefit from digital assets. Today, it's obviously the people in this room. A lot of us are evangelists for this stuff. But if the fiscal collapse happens and only like 10, 15% of people own digital assets and 85% don't, the 85% are going to be mad. And they're going to want politicians who take the 15% people's stuff away to help protect the 85%, right? So you need to help as many people as possible benefit from digital assets. That's number one. Number two, you have to make the system truly censorship resistant. And what I mean by that is not merely that you can send Bitcoin or ETH or whatever across the world and not have a government be able to censor the transaction. You have to have a way to convert fiat currency to Bitcoin and other digital assets in a censorship resistant way. Today, that payment rail or that conversion rail between the US dollar or the euro and Bitcoin or other digital assets is something that governments can regulate. And until we can find a way to do that in a decentralized way, and there are people working on it, but that is the technological hurdle we have to solve if we want to prevent that crackdown happening 15 years from now.
Excellent. So, the U.S. is now contemplating a strategic Bitcoin reserve. Avik, do you believe that building up a store of hard assets can in itself constrain fiscal spending, or do you see the tendency to spend as a separate issue?
It's been really interesting to follow. So we at FREOP, we proposed this concept now about almost 4 years ago to see how rapidly it's become an actual policy that the government is committed to is remarkable. Obviously, a lot of people put a lot of work into making that happen. So that's been amazing. I will say that, when Senator Cynthia Lummis of Wyoming talks about how, a Bitcoin reserve could help us eliminate the federal debt, that's an overselling of what Bitcoin could do. Because, yes, in theory, if the U.S. government bought an enormous amount of Bitcoin, maybe it starts to appreciate and could pay off some of the debt. But the debt is going to continue to get bigger. Mm-hmm. And so you're never going to be able to pay off all the debt. But because Bitcoin will appreciate, could that help facilitate the transition from the fiat dollar of today, which is backed by nothing except tax revenues, future tax revenues, to one that actually, like gold is appreciating too, but more slowly. If Bitcoin is something that does appreciate, you can say, okay, we've got at least this ability to back enough of the US dollar with Bitcoin that, again, the bond markets can feel like the US is not going broke. That's going to help. But there is still a lot of risk that if you don't do all these other things that we talked about, you're going to erode that Bitcoin reserve, just like we did with gold in 1971. So why did we move up the gold standard, or whatever you want to call it, in 1971 when Nixon blew up the Bretton Woods Treaty? It was because we were running out of gold. Yeah. Because the dollar had this convertibility to gold at a certain, 1/35th of a troy ounce, and eventually, everyone started saying, the U.S. is going broke. We got to get our gold out. And then we were literally about to run out, and they said, no, we've got to stop this. Yeah. So that is a risk in the future. So the Bitcoin reserve is good, but it does not solve the problem. You still have to actually do the budgetary reforms to get us out of this $2 trillion a year of federal deficits.
Yep, that completely makes sense. So next question is for Josh. You've traced historically how funding the state during times of emergency, particularly warfare, has resulted in our current international financial system characterized by central banks issuing inconvertible fiat currencies. And in recent decades, particularly since the 1970s, we've seen both our executive and legislative branches increasingly invoke national emergencies formally through executive order and legislation to justify domestic and foreign policies that would be hard to sell otherwise. So do you think it's possible for the United States to walk back its reliance on the state of emergency as a frame for policy making?
Yeah, so historically, what was meant by emergency was like warfare.
Yeah.
It was typically like something like a war, or even you could imagine something like a pandemic or something like that, where there's a need for immediate, rapid expenditures for things that people typically expect the state to do. Part of the problem, and actually part of how we got here, is that there's so much fiscal flexibility, or at least there has been, for the U.S., that lots and lots of things have become emergencies, right? Because, well, we have the flexibility to do it. Why don't we make this an emergency, and why don't we, why don't we do something about it? I think that there's a growing recognition that the path that we're on is unsustainable. And so I don't think that they're necessarily going to give up those powers or give up that tendency to declare emergencies about things, just on their own. I think that what's going to happen is that you're already seeing a push within the United States government to try to think about how can we make this sustainable? How do we get back on track? What are the things that we can do to sort of fix our debt problem? And the issue is that as they start doing that, that might start to reimpose constraints on the United States government. And when it reimposes those constraints, then we might see it less. Like, so to kind of piggyback on his point, the United States does not want to give up its sort of reserve status of the dollar. And they're going to do everything in their power not to give that up. But part of the reason they don't want to give it up is that a lot of policymakers look at this and they say, well, if we give it up, all of those benefits that our government gets are just going to accrue to some other government, right? There's some other sovereign currency that's going to take over. And I think like one of the things about like the strategic reserve is actually that if the United States government were to do something like that, what they're doing is kind of signaling to the rest of the world that like this is okay to hold. Mm-hmm. And so the reason that that's potentially important is that if you're the United States and if you're worried about the dollar's reserve status, one of the things that you might want to do is you might want to get your, especially your allies, but other countries around the world who are looking to actually diversify into a neutral reserve asset instead of some other asset that's issued by another sovereign nation, especially one that's a potential adversary. But as those kinds of changes take place, that is going to sort of reimpose some of these constraints. So it's not necessarily that the U.S. system would necessarily break down, but by reimposing some of these constraints, they're going to be less. They're going to have less ability to actually just go out and say, "Oh yeah, this is an emergency. We have to spend."
Yeah. So Avik, you've described 3 fiscal scenarios for the U.S. government, which represent 3 different attitudes, both toward fiscal spending and toward Bitcoin adoption. In recent years, we've also all kind of witnessed the rise of BRICS Plus, which is an intergovernmental organization that is building its own international lending institutions, its own interbank settlement systems and reserve currency, mostly to rival the G7 bloc. So do you see the rise of BRICS Plus as affecting which fiscal scenario the U.S. brings about? In other words, in effect, affecting our ability to exercise our exorbitant privilege to issue the world's reserve currency and reserve asset, and why or why not?
Yeah, mostly no.
Okay.
And I'll explain why. So the BRICS Plus structure will be effective at helping Russia in particular and China evade U.S. sanctions. So if they have a kind of a transaction network that allows them to evade U.S. sanctions, that's very important to them. Yeah. Because they want to be able to do things without the U.S. kind of bossing them around. So that's in terms of U.S.'s ability to project power through the SWIFT system in particular, that's where BRICS can be effective. But in terms of competing with the U.S. dollar as the world's reserve currency, it's not going to work. And the reason why is, particularly in the case of China, the Chinese economy is heavily dependent on exports to the United States. And China pegs its currency to the US dollar, keeps it within a very tight range, because if the Chinese renminbi were to appreciate against the US dollar, that would mean all the things that China sells to the US would also get very expensive, and that would put Chinese exports at a less competitive position relative to rival manufacturers. And that would crush the Chinese economy. And China is incredibly, basically their whole strategy for several decades now has been, we are going to make the renminbi less valuable to our citizens in order to drive this manufacturing export-driven economy. So for that reason, China's kind of stuck. They can't let the renminbi appreciate against the dollar, because if they do, then their economy crashes. So they really can't be a rival to the US dollar. They're kind of, in a sense, in a codependent relationship with the US dollar. The real potential rival other than Bitcoin to the US dollar is the euro. Because right now, the way the euro works is, unlike the US federal treasury bond or treasury security apparatus, where we borrow money as a nation, and states can't really do that. In Europe, each country, each member of the EU, independently issues debt. So the Germans issue debt, the French issue debt, et cetera. There isn't really, there's a little bit on the margins, but there isn't really a lot of debt issued by the European Central Bank that takes the whole Eurozone as its liabilities. And that may change. If there's some sort of crisis in the EU that leads the ECB to start to have that power, and all of a sudden the ECB, or the Eurozone, which is as large as the American economy in terms of GDP, if not larger, if they start to issue debt at the same scale or even a comparable scale to the US, that's a real competitor to the US dollar and US Treasury securities. And that's why what Paul Ryan said this morning I thought was really important, which is that he's made the argument, he wrote this Wall Street Journal article earlier in the year, he talked about how the rise of stablecoins is really important because it's become another source of lending to the US because they're buying a lot of Treasury securities. Again, that's not really happening with the ECB or the euro. And so that's going to be really the thing. The thing to monitor if you want to see the dollar weaken, other than what we've already talked about, is an economic bloc as large as the US that's really operating independently of the US dollar from a currency management standpoint? Are we going to see lending, in other words, treasury-type securities, sovereign debt being issued at that scale? Right now, that's not happening. And so it's really going to be up to Bitcoin to be the competitor.
Yeah. No, that makes sense. And Josh, I'm actually curious on your point of view on the same question. Do you see the rise of BRICS Plus as potentially posing a threat to the U.S.'s exorbitant privilege, or do you believe it won't be?
Not in the near to medium term. I don't think it's a threat at all. But I think that there is, to me, it's not the BRICS Plus that represents the threat. It's the fact that sort of BRICS Plus has become a thing that sort of signals that there's an issue. I think that the United States has probably overused its sanctioning power. Which tends to reduce the demand for dollars, right? Our adversaries certainly use fewer dollars, but even people who could potentially be our adversaries diversify away from the dollar when those kinds of things happen. The rising amount of debt. I mean, I think when you look at it, probably like the most important lesson to learn is to think back to the Bretton Woods system. So when the Bretton Woods system collapsed, a lot of people think that we just kind of got the current system because it was kind of path dependent, like the dollar just maintained its status and continued on. But if you actually go back, there's a very consistent pattern, from Nixon to Ford to Carter, where they were engaging in very, very deliberate policies to make sure that the dollar retained its status. And so if I'm trying to predict what the United States is going to do, I think that the United States is going to trend in that direction. They're going to try to enact those kinds of policies. I mean, the support for stablecoins is a prime example. It's like the support for stablecoins is like an explicit call to like, hey, we need more passive demand for treasuries, right? We need people who are going to buy this, no matter what. And so you already see steps in this direction where people are concerned about the future of the dollar, where they're concerned about how this is going to play out. And so you're already seeing policies that are aimed in this direction. The issue is that the current system, just like Bretton Woods, is sort of in an unsustainable trajectory because of the greater and greater accumulation of debt from the United States. And so part of what is going to have to happen is that as people are sort of trying to diversify away, they're going to have to find other assets to hold in place of those dollars. And so the things like stablecoins, these are going to be a temporary solution to the U.S. problem. This allows the United States maybe to buy some time, but over the long run, the system can't continue as is because we can't have, in a growing world economy, we can't have this ever-increasing demand for our debt because that just encourages the United States government to produce more and more debt. And at a certain point, they can't pay it back. And so I think that sort of BRICS Plus kind of just is like a symbol of a problem that's really starting to become salient in all of our minds. And so, but I think that the path forward for the United States is, yeah, they're going to try to do some of these policies to kind of keep the dollar status, but they're also going to have to try to encourage people to move more into neutral reserve assets, just as an attempt to kind of not allow some other sovereign nation to kind of swoop in and take some of that power away.
Yep. Yeah, so you heard it here, guys. Sovereign debt matters. I think that's the perspective of everyone on this stage right now, and that actually is a controversial proposition. There are a lot of people in the world today, and including in the policy community, who have the opposite point of view. They do not believe that debt matters, and in fact that debt can expand infinitely without consequence. And some of you may have heard of modern monetary theory. They're kind of the most visible example of that. But this is a widely shared point of view. And so one of the things we're trying to do in the Satoshi Papers is patiently and rigorously make the case for why debt matters. So if you can, pick up a copy today. It'll be officially published in early 2025. We're probably going to have a nice launch event in Austin, Texas, so you can sign up for our social media feeds to learn more about that if you'd like to join us. And with that, I would like to thank Josh and Avik for a wonderful discussion. Thank you.
Thank you.